we will start then at chapter 13. So let me share then on my screen so that you can be able to see what I'm displaying then on my side as to the new chapter then that we are going to start today, which is chapter 13. And when you look then at your chapter 13, they say that is a joint and byproduct. So we'll look then at closely then at these terms. And remember then, guys, here in this semester, we are just doing the reporting. If you could look then from chapter 9, we were doing the reporting if then the company is servicing or manufacturing different types of products. So we said that, okay, the basic job costing is a relevant reporting system or method that we can use because we're going to report for each and every product differently than from another. But then we come then to chapter 12 and we look at a scenario where the company is producing a similar product in volumes, then we said the process costing is going to assist then in that case because the products are identical, then we can just report all of them at once. But now we come then to joint and byproduct. Now the word joint on its own, it says, okay, there is a combination or there is a link, there's something then that links then at the certain products here. They joint, so they match. There's some that combines and then our products, and we've got also what they call it byproduct. So looking at that introduction, they provide us with the examples of industry where joint and byproduct arise. So we look at the timber industry, meat industry, and also the oil refining. And then they differentiate for us and talk then, okay, now we're looking at the timber, what could be considered as a joint product and what could be referred to as a byproduct. So in a timber, then, as you may probably know, that they are working then with wood. So producing different types then of a product that come out of the wood. So then they'll end up having then the various grades and sizes then of the wood that are working with. So we call that then as a joint product, is a main product that we have. Then again, we've got a byproduct. So the sawdust, bunk, and then the offcuts that we have, because as then they are sawing then this wood, that dust that came out of there, then they can make a certain product out of that sawdust instead of throwing it away. And also then at the offcuts, as they are cutting then exactly the size that they are looking for, then those offcuts that they have there, they can use them as a product. And that's what we say as a byproduct. So in other words, when we talk of a byproduct, it's a product that just came up in our production. When we were not expecting it, it was not in our mind, but we've just found, okay, why don't we make a product also with this? Same applies then with meat industry, your various grades of meat. Then you've got then the offal and then the bones. Sometimes even at the carcass on its own, then we can make it a byproduct. Oil refining, they'll produce then your petrol, your diesel, and paraffin. Then they've got the sulfur then on the hand, which then is going to come as a byproduct that they have then in that particular type then of industry. So in order then to be clear then on what we are talking about, when we talk about this joint and byproduct, I love then to invite you then to pay a closer look on the very first picture there. Then there's a question that says that, what do you see? And followed then by another one, what do you think and what do you wonder? So probably then if we can start with the very first question, what can we say? What do we see there in that picture there? The very first one. There is no wrong or right answer. It's just a matter of telling, okay, what do you see? Maybe my slide then is not appearing on your side.
Ikusha, teacher.
That is true. That's what all then we say. We just saw the Nikush. That's the answer that I was looking for. Then I will try again then from then this ego then and convert it then to chapter 13 language. So then this shift then that we see here, guys, then if then we can talk then chapter 13 language, we will end up seeing then we see then what we call it a joint product. So now you'll see again, okay, then this word of joint product, then it came up then into life when we are looking at this picture, because now you'll start then to say, okay, what is joining? Why then the joint product? Because out of then this shape, then you could see then the different sets or types of meat that you are going to have. Then from there, your neck, shoulder, breast, ribs, loin, shank, uh, legs and your shanks and everything else. So you see about 9 or 10 different sets of products that you are going to come out of then that to one product. That is the livestock in a form of a sheep. So we call it then the joint product. So that sheep. Then we can say again, what do we think? So probably then how much does then this sheep then cost? So probably then that's what came up then in our mind. So how much then did we pay for then this particular joint product, which is called then the sheep in this particular case? What then do you wonder? Then you may wonder then anything then that come up then in your mind. How nice the meat is and all those things. So it's up to you. But then the main important questions, there are those two questions. Then, Obokena, what do we say? Then we give it a name in terms then of then the chapter 13. Okay, we are seeing then a joint product here. Then what do we think? Probably we think of then the cost. What do we wonder? Wonder will say, okay, probably then how many different sets or types of the meat that we can come up then out of this shape. So we can come up then with this number. Then if you count then on the next page, you could say probably then we've got 9 sets of meat that will come out of then that one shape. And when we're looking then at this meat, then their prices are not going to be the same, because we are saying that okay, now all this meat is from one sheep, so we're expecting that the price is going to be the same. No, we are going then to have different prices and as per the types and of the meat, as you know that. So that's what we're talking about when we talk of then the joint and the byproduct. Why then are we say then a byproduct? What could be then the byproduct here? If you look inside then in the second picture there, you could see then we just then identify then the types of then the meat. But remember one thing, once then this sheep is being slaughtered, we are going to have 2 byproducts and that we are going to have at the end of the day. You will have then your 2 byproducts in a form then of the offal then that you have. The offal then and your skin, the skin of then this sheep. Then those are the byproducts. These are the things that we didn't even think of then by the time we were purchasing then this livestock. What was in our mind is that we need then the sheep so that we can slaughter it. We have got then these different types then of the meat, then your neck, your shoulder, chops, and everything else. But once then we slaughter it, we find out, okay, there's an offal here. What are we going to do about this offal? What about the skin? Are we going to throw them away because we say that we didn't need? No, we'll make them and then we'll come up with the price and say, no, we're not going to throw these things away. We are going to also then sell them at a cost, at a price. So then we just call it byproduct instead of saying that it is an additional product that we have. So it will be the byproduct. So that's what we're talking about, guys. And when we talk of a joint and then the byproduct. Now let's look at what the theory then is saying about these two, the distinction between your joint and your byproduct. This is what then we need then to know. Joint and byproduct are the output of a joint production process from which this production emerges simultaneously. As we've noticed in the previous slides, then we talk of one shape, but from this one shape, then we come out, we produce, or at the end of the day, then once we slaughter it, then we'll have then different sets of meat. So that's what then we've noticed from that picture. Alice, was then if you don't have question, can you please stay muted? Thank you. Then specifically when we look at the joint products, they say that two or more products, each having a significant sales value in relation to other products emerging then from the process. So you slaughter then the sheep, you know that I'm looking then for the shoulder, the your chops, those are your main products, as you've seen then in that second picture, that we are going to have then from this same or from this one sheep. Then the byproduct emerge incidentally from the joint production process and have the relatively small sales value in relation to the sales value of the joint product. Because if you can compare, you can't expect to have the price then of an offal being equal to more than the price of a chops, to make an example. Because the chops then is your main product, but an offal then is a byproduct. So automatically we're expecting then to see its price then being uh, slower than or smaller than the one of the main product. So that's what you have. So there's a quite of a byproduct, and unfortunately, even now, some of the people then they use the byproduct then as a status for their status, because you may think then of then the daily product. If you take then, for example, then the milk, they can take then the full cream milk and suck out then the cream out of then that milk, because they want to make cheese or any other product, then that will need only the cream. Then instead of throwing away that milk then without cream, they just give it a name and say, now this is a skimmed milk, and package it nicely and put it on a shelf and have a price. But you hear people say that, no, I'm only drinking then the skimmed milk. I don't take then the full cream and all those. So and when you look at that, that person is saying that with some pride. I'm drinking the skimmed milk, not knowing that in fact then you are drinking then a byproduct, something then that just came up then or emerged incidentally then in a production. It was not in the minds of then the company at all. So that's how then the byproduct then came up. So now we could say then the difference, guys, then between the two, your main product and your byproduct. But what is our role here as the cost accountant? Then our role again, guys, then is about the cost. How are we going to attach then the cost? If you can go back then to this slide and look at the different types then of the product that you have here. You've got a neck, shoulder, chops, neck fillet, then a leon chops, ranks, rump, shank, and your leg. Suppose then the total cost of then this sheep is 10,000 rands. I'm just making an example for argument's sake. Now the question will be then after then we slaughter it. If then you've got then four types then or four chops here, as you can see in the picture, and also then you've got the leon chops again, another four pieces. You've got the ram. Now the question is, how much then will be the cost then for these chops, leon chops, ram, ranks, and everything else out of that 10,000 rands? How are you going to allocate the 10,000 rands according to your products? That's the question that we'll try to answer then in this chapter. That is why then we are doing that. So where we are then as cost accountants. Okay, now let's try then to allocate then that total cost according to the products then that we have. In order then to do that, we firstly come then to a point that we call it split off point. Excuse me, I've got some cold. So we come then to the split off point, and they say a split off point is a point where joint and byproduct emerge from the same production process. These products are only separately identifiable after the split off point. So then to have a picture then of what we're talking about, just think again of the production line from chapter 12. So this is the production line that you are familiar with from that chapter. So then this is your 100%. You bought then and you earn your sheep, 10,000 rands. That's your joint cost. You slaughter it, then that's your process. You start the process of slaughtering then this sheep. Then when you come then to this point, this is the point that we're talking about, the split of point. Now you start then to say, okay, now this is then my neck, then this is my shoulder, these are my chops, then these are the legs, this is what, and all the types of a product that you have. So you'll have then say, now this is your product A, B, C, D. Then those are your main products. Then probably then you've got also the byproduct, your E and F. That's your byproduct, your offal then, and your skin or carcass then that you have there. So this is the point that they are talking about. That's we call then at this point as a split of point. That's where then we can differentiate the types of the product that we have then from one main cost or production, because we bought then the full sheep here, we slaughter it in the process, and we've got these different sets of the meat. The questioning is this, guys, and how much out of this 10,000, how much will go then to product A, B, C, and D, E, and F? Then if we also want to allocate some cost also then to that. That's what then we try then to look at. And they say that also after split of point, some products may be processed further. So we can also then expect that, but some of the product can be processed further. Take for example, then if then we know that okay, product C, then is let's say it's your leg. Then you said out of this leg, then I want to make then the means. So it means that then you'll further up then the production, so that then you produce the mince meat. Then and whatever type of then the meat that you are looking for. But we don't worry much then about any process that took place after the further process, because any cost then that we incurred, we know that that cost is directed then to product C, because we've already identified then the products. But then our question that we try to address is about this 10,000 rands. But how are we going to allocate to our production, so that we can be able then to calculate the cost per unit, because that's how then the cost assist us. And the next slide then is going to talk then to that. Okay, why now? Why then do we worry ourselves about separating then that joint cost? They say a cost incurred in respect of then the joint process. Then a joint cost cannot be directly traced to each individual product emerging from the process. Hence, then we say that we've got a total amount of 10,000 rands that we don't know but how much will go to A, B, and C. So that's a total amount. Joint costs need to be apportioned between joint products, and in certain circumstances also then are two byproducts. So this is what we've talked about. For what good purpose? So that we can be able to know the value of our stock. Also then it assists us in pricing decision, because in order to decide on the price, you need then to know the cost. Determine the profit for each product, so that we can say sales minus the cost, then to arrive then to the product. To the profit of that particular product. So they give us also then this figure where then it explains then what we've just talked then about. So if then you're looking at this, so the joint cost here, so it means that then this is then your sheep. Combine it, but then in other production, then I will talk of material, labor, and overheads. They form then your joint cost. So once then you slaughter then this sheep at this point, and we call then this is a split of point. So once then you arrive then to this split of point, now you can say, okay, out of then this sheep, I've got product A, B, and C. If you decide then to further process to A and B, you will incur direct labor, material, and overheads for each product. And we said that we don't have a problem with that, because you can see here, each and every product has got its own material, labor, and overheads. We are clear then about those costs. So which we term them as further processing cost, and they are separately identifiable for each product, because they are after further process. But the cost then that we've got a question then about is the joint cost. That's the cost then that we will try here then to allocate it then to our main product as well as to your byproduct in some instances. So firstly then what we are going then to look at then here guys, and we're going then to first look at the methods that we'll use to allocate the joint cost to each joint product. And please then get me correct when I'm saying that. Looking at the method that we use to allocate joint cost to each joint product only, without then the byproduct. So the first method is your physical units method, followed by the sales value and split off method or the market value method. Then the third one is your net realizable method or hypothetical market value. The last one will be the constant gross profit method. So we've got those four methods then that we use to allocate joint costs to our main products. Okay, so there was someone who said that she was waiting for the class. I hope then she managed then to join. Is Andy Swa have joined then at the session? Because I'm also not sure then what's going on, because she is supposed then to see then the calendar. Let's hope so. So then those are the four methods that we use then guys then to allocate the joint cost then to each joint products only, not a byproduct. We cannot use any of these four methods if we've got a byproduct then in a question. So we first need then to do away then of a byproduct. Then we can use one of these methods then to allocate it on cost. We will go then to show you then that. So first let's look at the first method, the physical units method. Costs are allocated in proportion to volume. Each cost is allocated a proportion share of the total joint cost. Cost per unit is the same for each of the products. No correlation between the joint cost allocated to each product and the corresponding sales revenue. Difficult then to implement where products have different units or of measurement, e.g. then if you've got a liquid and also a gas, so you can't really apply then this method. But then it's a simplest method, but at the same time it can distort profit reporting and inventory valuation. So that's the disadvantage that we encounter when we are looking at a physical unit method. But for us then is to learn how to use then the method. That's what is key then for our syllabus. So we'll look then at this question 13.1 and see then how can we use physical sales then in our reporting. So if you look at your textbook 13.1 in your third edition, that's where then this question has been taken from. So it says Cell PH Limited manufactures two joint products, namely product Cell A and Cell D. The joint production costs incurred in the manufacturing process for the two joint products are direct material, direct labor, and variable manufacturing overheads of 200,000, 150,000, and 250,000 respectively. The sales and production units for Cell A were 225,000 and for Cell D they were 30,000. The total cost of the total cost to process Cell A further is 400,000, while cost to process Cell D further are 500,000. The selling price of Cell A is 25 Rand per unit, while the selling price of Cell D is 40 Rand per unit. The selling price at split off point excuse me, was 20 rands per unit and Cell A unit for Cell A and 30 Rand for Cell D. That makes all sense, guys, and because if you further up the process of a product, you are advancing the product. So we're expecting then to see the selling price being more. Hence, then you see then before then we further process, the selling price then for selling was 20 rands, but after further process, it goes up to 25 rands from 20 rand. Sell D, it was 30 rands, but after further process, it goes up to 40 rands because of the advancements that is being done. Allocate the joint cost to cell A and cell D using the following methods. So the first one is your physical measurement or physical units. That's the first method then that we are going to make use of. Now we'll see then how to do our reporting then using a physical method. And do our allocation. So we said the first method is your physical units. Method. So then the column is going to be our product, followed then by units and the total. So we've got cell A and cell D. Because we're using the physical units as our reporting method, we go back then to the question and look at how many units did we produce on cell A and how many units then did we produce on cell D. So when we look then at our question, it's explained then clearly there then towards the end of the first paragraph that the sale and production units for cell A were 25,000 and for cell D they were 30,000. So if you look at that, these are then the units that we're talking about. Cell A, you've got 25,000 and cell D is 30,000. So it's your production and your sales units. You need then to be very careful of that because sometimes you'll find that the production and your sales units and they are different. You've got a closing working process. So be very careful. And then if then you've got that, you must know that you'll take the production units. Remember what we're doing here, guys, and we're allocating the production cost. So we're allocating the production cost using physical production units, not the physical sales units. So they say that is going then to be 25,000 and 30,000. So because then we're using then these units, we'll need then to have a total. Let me not say it's a total here. Let me say this is the joint cost. 25,000 plus then your 30,000, it gives us a total of 55,000. Now let's go then and work out then our total joint cost. What is this amount that we are allocating into our production? So let's look then at that question. Go back then to our question 13.1. Sentence and before the last sentence in the first paragraph, where it says that the joint production cost incurred in the manufacturing process for the two joint products are direct material, direct labor, and variable manufacturing overheads of 200,000 plus 150,000 and 250,000. So we'll add then those three costs and to get then our total joint cost. So 200,000 plus 150,000 plus 250,000. Then it gives us how much? Remember, again, we agreed that then you'll be the one who does the calculation. So we've got 200,000, 150,000, and 250,000. And the total is how much?
600,000.
Then we've got a total of 600,000. So this 600,000 is our total joint cost. Is that cost of a ship? Then we want then to split it now then according to the number of units then we produced in each product. So on product A, we've manufactured 25,000 units. Product B, we've manufactured 30,000 units. So then to calculate the share that will go then to product cell A is going then to be 25,000 divided by 55,000. Multiply it by the 600,000. That's how we're going to calculate then the share. So 25,000 divided by 55,000 times 600,000. And what is the answer? When you take 25,000 divided by 55,000 times 600,000, that gives you how much?
272,727,27 or comma.
Thank you. Then we've got 272,727. So let's just round off then to the nearest rands. So we'll take it like that, 272,727. So then to get then the share that will go to cell D, again, you will take 30,000 divided by 55,000 times 600,000.
$327,272.
Thank you. 327,270. Now we'll just round off then again to the nearest rands and say that 273. Or else, and in this case, guys, if you've got two products, and once you've calculated then the value of one product, you just simply minus and get the difference. That's another option. So now we've managed then to allocate then the joint costs and to these two products according to the number of units that we have. But as you could see then that as per the advantage, they say that this is the simplest method that you can use because you've done it here. And they said also then the cost per unit is the same. You can test that. Take then by taking then this 227,727 divided by 25,000 units. 272,727. Let's divide it by 25,000. So it's going to give us 10 rand, let's say 91 cents. Take again then out 327,000 273 divide again by 30,000. And you see again, then the cost per unit is going to be 10 rand 91 cents. As they've said that the cost per unit is going to be the same. So that's what you can do in order to test your calculation. If then you are correct then with what you've calculated. That's one thing then that they've said about this method, and said it is the simplest method. That's an advantage. But the disadvantage of this method is that it can distort then our value of our stock and also then at the profit calculation. Because why they said so, it could be possible that although the new cell A has got a lesser number of units, but is the most expensive than our product, than cell D. But when you look then at the cost allocated into cell A, they are lesser than the ones that are allocated into cell D because we use the number of units. So it's only based on quantity, not then the quality or then the value or the expensiveness of then the product. So because of that, then we tend then to have the complaint and say, now this method might not be good to allocate then our joint cost, as we find that then it can ruin then our value of closing stock as well as our profit calculations. Then we have then to sit down and see, okay, now what else can we do? What other method can we come up with in order then to allocate this joint cost in an attempt then to try then to solve then this problem that we are encountering then with physical units method. Then that takes us to the second method then that we have as the alternative method that we can make use of and see if the things are not going to go then on our way if then we are using then the second method, which is called then a sales value at split off point. Once again, if you still remember then what I've said then about then the split off point, we said that then this is then your production line. This is then the point. So we simply say now let's look at our sales value at this point. Not at after further process, but at the split off point. So we look then at the value there because we said that what we try then to rectify here is to have the correct cost allocated according to the value of the product instead of the number of units. So costs are allocated in proportion to the estimated sales value of production at split off point. Please then again highlight that. About what are we using? We said that we are using the estimated sales value of then the product. How are we going to calculate this estimated sales value? Then to work out then this estimated sales value, you take your production. Your production units, you simply multiply then by the selling price. That's how then you do the calculation of that estimated sales. I'm not saying sales here, guys, but I'm saying production. Because then the understanding in a business is this: whatever we produce, we are going to make sales with. So if one has said that to work out the estimated sales, you just take then what is produced, the production, multiply it by the estimated sales. Therefore, a large portion of the joint cost is allocated to products with higher selling price. So then they give you then the formula then to work that. But then for our case, and we are going to go back again to the question that once done, the Cell PH Limited which manufactures two joint products, product cell A and cell D. But now in the requirement, we are going to allocate the joint cost to cell A and cell D using the sales value at split off point. We're no longer using the physical units, but now we're using the sales value at split off point. So let's see then how are we going to do then our calculation. Now we're looking at sales value at split off point. Once again, we said, okay, we've got the product, units. Now we've got a new column, selling price. Remember what selling price? Selling price at split off point. Then to come then to your estimated sales. Then joint cost that we have to allocate. We do know, guys, that our joint cost from the previous calculation, that our joint cost is 600,000. It hasn't changed. So it's going to be that 600,000. What then the product, your cell A, your cell D. The units here is 25,000 and 30,000. There's no point in to add them now because we're no longer going to use the physical units and to allocate. Let's go and look at then the selling price at split off point. Not just any selling price from the question, but we're looking at selling price at split off point. Look at the second paragraph. The total cost of process or to process cell A further is 400,000, while cost to process cell D further are 500,000. The selling price of cell A is 25 Rand per unit, while the selling price of cell D is 40 Rand per unit. The selling price, this is what we're looking for. The selling price at split off point was 20 Rand and 30 Rand to cell D. Why I will say SP then here instead of SO. Split off point. So we do know now it was 20 Rand and 30 Rands here. So that's our selling price. So you say 25,000, multiply it by 20 Rands, then it gives you how much? To work out then our estimated sales value. 25,000 for cell A times 20 Rands.
500,000.
And it gives us 500,000. Then our cell D, 30,000 units. Multiply that by 30 Rands.
900,000.
Good, we've got 900,000. Then let's add the two figures because these are the figures that we're looking for. Then to allocate our joint cost. So 500,000 plus 900,000.
1,400,000.
1,400,000. That's the total then of the sales that we're going to use. Now we've got then the values that we're going to use to allocate our joint cost. So then to do the allocation for cell A is going to be 500,000. You divide it by 1,400,000 times 600,000. $500,000 divided by 1,400,000.
It's 214,286.
Thank you. Then it gives us 214,286. Then I can simply say minus 600,000 then to get the value that will go then to cell D, or you can do the calculation again of taking 900,000 divided by 1,400,000 times your 600,000.
$385,000. 85,714.
385,714. So that's then the allocation now. Now we're becoming happier because we said, okay, at least we're using then the sales value. So we've allocated this cost again. Then the product that has got then the higher sales has got also then the higher cost, because the understanding is once the cost is high, it means then it takes us a lot then to manufacture that particular product. Therefore, we're expecting then also the cost then to be high. So that is fine. But again, then we complained then about that and said, okay, this estimated sales value does not cover then all then the costs then that we have in the process. Because the question will be, what if then the product is further processed? So we want then to see all the costs that are taking part in the calculation here of the joint cost. Even if then we've got the further process cost, they must also then be part of then our joint cost allocation. Then that makes us then to come up then to a new method then again that we use, which they call it then the net realizable value method, as our third method that we can use then to allocate then the joint cost. So the net realizable value method, the first thing that we do, we estimate the market value. So that's the first calculation that you have to do, is to calculate your estimated market value. And to work out your estimated market value is your units produced multiplied by the selling price. Remember now what selling price? Because before we use the selling price at split off, but now the selling price after further processing. So please take note then of that. But when we are using the net realizable value method, it's going to be the selling price, it's going to be a units produced times the selling price after further process. Then you've got then the net realizable value amount. Then you take that as to work out your net amount. It's going then to be this estimated market value, and you minus the further processing cost. That's how then I'm sorry about that. And let's hope that then it didn't stop then our recording. Then at this cutoff, then I just then receive then the call, and automatically then it just cuts then our connectivity here. So that's our second method, of allocating our joint cost, net realizable value method. So that's how then I will calculate then this amount. Oops. Okay. Now let's look then again, the further given the advantages and the disadvantages then of that. Then let's look again at this same question. But now the requirement is to use then the net realizable value method then to allocate our joint cost. So we're using the net realizable value for the product, units, selling price. Remember now this is going to be selling price after further process. Then to arrive then to estimated to your estimated sales value or market value, then minus further cost, then to arrive then to the net realizable value amount, then the joint cost that we want to allocate. We know that the joint cost is 600,000. We've got to sell A and sell D. 25,000 units, 30,000 units. Selling price after further process. Let's go and check then to our question. But what is our selling price after further process? It's given here, we've got a selling price. Sell A is 25 Rand and 40 Rand sell D. So that's the selling price after further process. 25 Rand and 40 Rands. So the first product then of cell A is going to be 25 Rands times 25. What will be then our market value or estimated sales value?
$625,000.
625,000. Thank you. Then a cell D 30,000 times 40 Rands. It's give you how much?
1,200,000.
Thank you. 1,200,000. Remember that after we've got these market values, then we must minus. We have to take out then the further processing cost. If you look at then at that second breakpoint, the total cost to process cell A further is 400,000, while cost to process cell D further is 500,000. So these are the figures that we have to take out. Please, after then you answer, then Kaplan, you please stay muted. Freda, I can see your mic is flashing there. Thank you. 400,000 and 500,000. It's good then to put then now these figures then into your brackets, because I mean we are human beings and sometimes we tend then to forget then what we're doing. Instead of minusing, you may end up adding then this value. So please make it a point then that you indicate that okay, this is negative. So then it's going to be 625,000 minus 400,000. Then what will be your net realizable value for product cell A?
$225,000.
225,000. Thank you. And product cell D 1,200,000. Then you minus again 500,000.
700,000.
700,000. Thank you. Then these are the values then that you are going to use then to do your allocation. So you add again then this 225,000 and 700,000. So that means our total here is, thank you, sorry for interrupting you. So you've got a total of 925,000. Then you can do the allocation as we used to. So you'll say 225,000. Then divide by 925,000 times 600,000.
$145,946.
Thank you. $145,000 946. Then for cell D, 700,000. Times then 600,000.
$4,054.
Then it's going to be 454,054. So that's the allocation according to net realizable value method. So that was our third method of doing then the allocation. Allocating again then the physical units or the joint cost to our main product or the joint product. So that's how then we are using the net realizable value method. It's also easy like that. Then the fourth one is the constant gross profit method. That's another method that we have because we said that we are using this to calculate the profit. So what if then how about coming up with a method that is going to rely on the profit that we're using? So the understanding then on this method is this, but since then our production, our units are from the same joint cost. So we suppose then to have then this constant gross profit. Hence then we come up then with this method. So after joint costs are allocated, the overall gross profit on sales is the same for all products because we're using the same joint cost here. So to calculate then the gross profit in total is your gross profit minus your total sales minus then your total cost. Then you get then to the profit, which is going to be the gross profit divided by total sales. Then we can allocate each joint cost by saying sales minus the gross profit minus your further cost. Then we know that but the remaining cost then are supposed to tend to be your joint cost. So that's then the understanding then behind this cost. So let's quickly then look at that with this information and see if how to do then our calculation if then we're using the gross profit. So they say the first thing then that we need then to do is to calculate our gross profit. To calculate the gross profit, you take sales minus cost of sales so that we can have then the gross profit. Which we can express also then into total and a percentage. So we will use then the calculation that we've done here. So this is our total sales. If you look at the previous calculation in your total estimated sales. So it's your 25,000 times 25, which is your selling price after further process. Then it gives us 625,000. And that 1,200,000 on sorry. We have a total, must have a total here. So I need here then your 625,000 plus your 1,200,000. So it must be then the grand total of the two. 625,000 plus your 1,200,000. The 1,200,000, if we go back, is your sell D estimated sales. And your answer is?
1,825,000.
Thank you. 1,825,000. Then we minus then the cost. So our cost, when you look at our cost, is your joint cost of 600,000. Remember now, guys, we are just doing the totals. We don't do this, them separately. So we do know the joint cost in total is 600,000. We don't know how much will go then to cell A, how much will go to cell D, plus then the further cost. These are then the further costs then that we have 500,000 and 400,000. So they give you a total of 900,000. So you will take this 600 plus 900,000. To get to your total cost or total cost of sales, because the assumption that we use here is that, okay, we've made the sales for everything. So then your cost 600,000 plus your 900,000, and it gives you what?
1,500,000.
1,500,000. That's your total cost of sales. Then you take then your sales of 1,825,000 minus 1,500,000.
$325,000.
325,000. That's our gross profit, the combined gross profit. So is this 325,000? So what we want to to work out then here, guys, is we want to work out then the constant gross profit. So take then the 325,000, which is your gross profit, and divide it by, I'm saying 325,000 divide by the sales of 1,825,000. Then you can say times 100 to arrive then to your full percentage. So our constant gross profit percentage is what percentage?
17.8%.
17.8, or we can roughly say that is 18%. So there's nothing wrong if you can do that as well. So I'll take 18%. So we do know then, okay, the combined gross profit percentage is 18%. So in this method, they say that we're using then, guys, then the constant gross profit. So the profit is the same in your calculation. So here then we've got to product cell A and cell D. Now we look at how are we going to use excuse me, this constant gross profit then to allocate our joint cost. So we first take the sales according then to each then our product. Now the sales then, our total estimated sales in product cell A is 625,000 and 1,200,000. So we say minus gross profit. What we know about the gross profit is the percentage. Okay, our gross profit is 18%. So now that you know the percentage, that is 18%, then the same thing that you'll go then to each and every sale of the product and work out to 18% of that total amount. So you'll take 625,000, multiply that by 18%. 625,000 times 18%. 112,500. Put it under brackets because you are going to deduct this amount. This 112,500. Then you go again to 1,200,000. Again times and 18%.
216,000.
216,000. That's correct. So if then, guys, then from his sales with minus the gross profit, what is going to be left? If you say sales minus gross profit, you're left with what?
Cost of
That's correct. You left then with cost. Look at this calculation above here. We say sales minus cost of sales is equal to gross profit. So again, if you say sale minus the gross profit, then the difference will be the cost of sales. Then that's our cost of sales. So you say the 625,000 minus 112,500. Then our cost of sales on sale A is equal to how much?
512,500.
512,500. Then on sale D, 1,200,000. Then you take out 216,000.
984,000.
984,000, that's correct. And we know that on chapter 13, the cost of sales is made out of two items or two costs, which is then a what and what? There are two. Two elements or two items that make up our cost of sales in joint and byproduct. And what are those two elements? Now I'm testing you guys. Look at the first calculation that we've done. The answer is there. If you look at those cost of sales, what did we combine? What was that 600,000? What was that 900,000? Sir? I hear someone is saying, but saying then very soft.
Further cost and joint cost.
That's correct. Then this was our joint cost, and this was your further cost. So that's what then we know. That's what makes up then our cost of sales then in this chapter. Is your joint cost and your further cost. Now, when we look at this total cost of sales that we have, we can minus here then the joint cost because the joint cost is still 600,000. But we do know the further cost per product out of 900,000. We do know we can minus then further cost because we do know then the further cost of cell A and further cost of cell D, don't we? Yes, we do, because if you go back here, here's your further cost. Cell A is 400,000, cell D, then you've got 500,000. That's what makes that 900,000. So we minus this side 400,000 and 500,000 this side. So we take then a 512,000, 512,500. $512,500 and you minus 400,000 and it gives you how much? 112,500. That's your cost. Then coming then to the second one, you've got 984,000. Then you minus 500,000. Then it gives you
484,000.
484,000. Now, what is this 484,000 and 112,500? What are we going to term it?
Joint cost.
100% correct. Joint cost. This is how then you allocate your joint cost if you are using the constant gross profit. You can test that, take the 112,500 and say plus 484,000. So it's going to give us now 596,500. So you could see then because then of the round offing that we've made by the time we were doing then the gross profit percentage calculation. So under normal circumstances, it was supposed then to be to 600,000. So it has got a difference of that 500 rands because of then the round offing. So no one's fault. But that's how then you allocate then the joint cost to your main product using the constant gross profit method. That's how then it works. So your joint cost will then automatically will be then the last cost that you'll have. So these are the four methods then Kaizen that we use to allocate then our joint cost to our main product or our joint product. So we use then those four methods to do our calculation. As you can see here, then we've done this. So then that's how we're going to end then our today's session. Thank you so much for attending the class. We'll further up then next week. Then I hope Monday, because Friday then we are writing then our test at 11. So when we meet up again next week, we'll carry on then with this chapter with the hope that we're going to finish it. Thank you so much. Let me stop then our recording.